saying you do 1 million, 5 million in revenues. That's an absolute failure in the VC world.
Thank you everyone for joining into yet another episode of Scaling the Unscalable. Today with Manuel, we will try to talk about a very interesting topic, bootstrapping versus fundraising. I personally been a very big advocate of bootstrapping during my whole entrepreneurial journey. I've also kind of frowned upon fundraising, mostly because I haven't been able to raise funds myself. But yeah, I do see the pros and cons between the two. Now, Manuel, you have been running Pirate Summit, you have been knowing investors and startups for all your life, essentially. So you can certainly give a broader perspective. Why don't you just start? Maybe give a short description between the two and when each one of them makes sense, and then we can take it from there.
Yeah. So bootstrapping is basically that you build your business out of your own means. You don't raise funds, but you have some kind of product, service, something of a value that somebody else buys. And your investors are basically the customers. Once they buy your product, you have enough funds to continue building it, to continue delivering the service, all of that. So that's basically bootstrapping. And fundraising, or the VC game, is that you go out and once you have some kind of prototype, a little bit more than an idea, some kind of prototype, something that is promising, then you go to investors. They give you venture capital, so that's risk capital, and they give you 100,000, 1 million, whatever it is, of venture funding, and then you go and you try to build your business. And usually that comes with having to build your business pretty fast, because this is not a donation. Obviously, it's not a gift, but investors want to see a return over time. There are a few other things how to finance a business. You could go to banks. Usually when you start out, you don't have a big reputation. You have nothing to really show for. Yep. That's not something that banks do. You won't get enough money, or you won't get any money for that matter. So that's not a really viable option. Then there are other options. You ask family, friends, and fools to basically borrow you money, or you make a small equity round, but this is not really venture funding. It's just people that help you off the ground. So I think these are the very common ways how to fund a business. I think there are a few kind of not so common ones. Earlier on, you could do crowdfunding. You basically go out with an idea and you tell that idea, I'm going to build this product. If you pay up front, basically pay me now, and then later on, I will maybe in a half a year, in a year, in maybe even 18 months, I will deliver that product that you paid today. That's like an intermediate kind of funding thing. The most important thing is, if you go bootstrapping, you don't give away equity. It's basically you just exchange a service for money. If you do venture, eventually you give away equity. Usually, there are a few revenue-based models, but that's the usual case. And important is that those two scenarios have very different kind of building characteristics. You build a company different. You have different goals, and you're building towards something different most of the time. Or certainly, if you have venture, you have a certain route that is basically expected.
And what is the difference between the two?
Well,
so if you are a founder, how do you choose between bootstrapping or fundraising?
So the most important thing is, if you do venture funding, then the moment you sign that term sheet that somebody else gives you, whatever it is, 500,000 euros for a stake in your company, let's say 10%. If you get that, then that moment you basically sold your company. You didn't really do that, but you said you are going to sell eventually, because VC needs a liquidity event at some point. Usually they have funds that run up to 10 years. So within 10 years, they want to do an exit, or they want to get their money back. How does that work? Either you sell to some company that wants to buy it. Maybe you do an exit through an IPO, but that's fairly rare nowadays for at least European companies. Or you sell to another investor or a private equity firm. your stake in the company, and then you basically, hopefully, as a VC, you get a certain return back. But you
Return.
have to these funds. How do they work? They have limited partners. Limited partners meaning there are people putting their own money into these funds, expecting a certain return, and these funds, after their term period, the fund period expires, they basically want to return the money, need to return the money, and that's why they need the cash back at some point. So that's and then obviously, if you are promising you're going to sell the company in a certain amount of years, which is not set, but you will eventually do that, you are expected to get a certain multiple, because the fund, for those LPs, they want a return. And how funds think, that's really important for founders to know, that funds think that like a portfolio. They expect a lot of companies that they invest in to actually fail, but a few of those companies they expect to actually make it big. So I think that's really important. So they are betting on several horses, like let's say 10. They know 8 of those are eventually going to die. They're not even going to reach the finish line. They're just going to die. And one of those is going to be super, super fast and going to be the absolute super racehorse. And maybe the other is doing okayish. I'm exaggerating, obviously, but that's kind of the thinking there. So if you are a founder, you don't have that luxury. You only have one horse, and you actually want to make it over the finish line. However, you have to beat that horse up really hard to hopefully be that super horse. So you have to scale really, really fast. I don't know, that analogy might not be not have been the best analogy, but
it was fine.
I hope that people understand what I want to say. But basically, you are building rocket ships when you go the venture capital route, or you are committing to building one. And that whole idea of building a durable business, a business that actually, that is just a good business, doing a sufficient amount of money, maybe saying you do 1 million, 5 million in revenues. That's an absolute failure in the VC world. And in the bootstrapping world, if you employ 10, 50, whatever it is, employees, you have actually built something, right? You have built something. You can provide for certain people. They have jobs. So that's, in my book, that's a success, especially if you in the end up with 500,000 in profit, or 1 million in profit. That's a success in my book. In the VC world, no. So the VC world goes, you maximize growth, and eventually you maximize for an exit value, so a company valuation. If you go the bootstrapping way, you can do all of that, but you can also do other ways. You can just build what I would call a calm company, a durable company that is here in 5 years, maybe here in 20 years, doing good business, serving customers well, is loved by customers, loved by employees, where people
solves a problem.
Do a good, exactly. And also the founders, the shareholders, they might also go home with a decent amount of money through dividends. So that's just really a different route. I'm not for or against any of those. I think it's just really important in a world where we all talk about startups and you need to get fundraising and what's your latest valuation. This is just a very tiny fraction, because not all horses are born to be racehorses. Not all companies are rockets and need rocket fuel, which essentially VC money is. A lot of companies are just really good, solid companies that will not grow like crazy, but that serve customers well. And that optionality is important to put out, that people know that there are multiple ways to build businesses, none of which is better or worse, each of which comes with certain consequences. And in my view, it makes a lot of sense, if you don't know which route to go, to kind of push it out until you better.
Okay. So can you maybe, for example, start with bootstrapping and then change and go the fundraising way? Would that be an option?
That's super important. You can start with bootstrapping. Bootstrapping holds all optionality. You can do everything. Afterwards, you can do fundraising. You can just continue with your business. You can sell without ever having raised. You can do an IPO without ever having raised. So it's totally possible. The other way around is usually not really possible, because you get investors in. Once you have investors in, they want this. Okay, now make this big, increase the company valuation within the
And
shortest
build
amount
a
of
horse.
time possible. And if you just say, okay, I just want to go for profit now, and I've raised maybe 500,000 euros in funding, and then you say, well, I just want to go for profit and stay at my 3 million revenue with 500
Mm-hmm.
a year, then investors say, oh, I'm not going to be able to sell that company at that amount that I actually need to get my returns.
Okay.
Investors then, their incentive is to actually push you towards going for growth instead of going for a profit. So
Yeah.
it's not a viable route to go for fundraising and then do a bootstrapping or a building a dividend company, or a profit based company. So that optionality is off the table. You sometimes see that people do a buyout, do a management buyout, something like that. But that's certainly not the case. Those scenarios are not usually
The
are
common ground.
not
Yeah.
really beneficial for the investor. It's more like a fire sale. They just want to get out. They basically say, okay, I take this off my balance sheet that I can move on, and
Yeah.
they hand it for €1, maybe they hand it over to the
Yeah.
founder, say, you can have it, you do whatever you want with it, but they can clean things up in their balance sheet. So this is, I think it's very important not to have a religion around this. This is better, this is worse, this is something.
Okay.
It's really important to know what you want, to understand what the options you have in the market, and then to choose based on what your right path actually is.
Okay. Well, in my idea, I've always thought that companies that go the fundraising way, they tend to not be able to make profit, because it's a different skill set. The whole fundraising thing, it's very different than building a company that's more focused in generating revenue and profit. So is that the case? Is that something that happens usually, or is that just specific in a few cases?
Well, that's a very good point. So the most important thing is, and this is not something that you learn in the university, but that
Okay.
entrepreneurs, they should be good at building a business, actually selling something, and then in the end having more left over than what they had to spend. So basically earn a profit. That earning a profit is actually a behavior or a muscle that you train by doing it. It's not looking at theory or something like that. The market
Or
is
reading a
very
book.
harsh, and you cannot learn the market in books. You can just experience it by actually doing it. There is a saying. I'm not saying this is true in general, but that people that go the fundraising route often are really good at spending money and not that good
Okay.
at earning money.
Yeah.
This, of course, that sounds provocative, etc. Let's rephrase it a little bit. They are really good at investing money well and not having an immediate return, but maybe have in the future a big return. You see that also with very famous, very successful entrepreneurs.
Okay.
Jeff Bezos famously with Amazon, the first, I don't know, 18 years, they didn't have any profit. They just reinvested everything. Basically, what the idea was that they need to go really, really fast, to invest really, really fast, and then at some point they're going to reap the benefits, which they did. So this is not. Please, absolutely do not generalize this. There is a certain thing with this entrepreneurial, maybe street smartness, turning an idea into a profit, turning an idea into a product, turning that product into a profit. And that's something that the famous lemonade stand when you're 8,
Yeah.
where you get an idea how this actually works. This investment route is something a little bit harder to actually learn when you are younger. Maybe a quick example from my son. When he was 11, he basically started he sold things in his school by being really, really smart. He turned something which seemingly was not a business into a small business, maybe by accident. I don't know. I never really talked to him about it that much. But what he actually did, there was when they went to get lunch, then um, they all had one dessert, and everybody wanted those desserts, but each only had one. So what he did, he actually bought the dessert and actually sold it for a premium. He did it every time that he was that he was at the school. Other kids really wanted that and were willing to do that. He did that with 11 years old. Took me a little bit of time to actually figure it out what he was doing, but he always had enough money around. And there was like, where do you get that money? And then he told us, well, I'm basically doing that. They all want it. I'm not that keen to eat the
I don't care
dessert.
about
Everybody
it, yeah.
wants it, and that way. And I thought that was actually smart. So what did he do? Just like what good entrepreneurs, good bootstrappers do, they see an opportunity. They didn't have to create anything. It was just a very smart. There was a
was there,
mismatch
yeah.
in basically the market. There was more demand than there was a supply. It was an artificially limited supply because there was only one dessert per kid, and he just played on that market dynamic. And that's a skill that you either you have and you feel that market dynamic, or you don't. My daughter, she likely wouldn't have done that, or she wouldn't have felt it, but he maybe has more this entrepreneurial sense. And now he has his first money, not through that, he stopped that, but through some other means, helping out here and there. And now I'm actively with him learning how to invest. What we are currently doing, and that I think that's also a really good skill to actually hone, and that's more let's say the VC route, if you will. We go and we think about where should we invest in, and what would be worth more over time. You can obviously do that if you look at ETFs or something like that, right? The shares, etc. And we will do some of that so he understands that world. But what I'm actually looking with him at right now, and maybe you have good ideas how to do that, where can we invest into physical products right now, which are not really expensive, 50 euros, 100 euros, something in his budget, where in 2 years they will be worth more.
Okay, that's smart.
Right, and that's more the investment route that people like Jeff Bezos with Amazon. They just reinvested everything in the business. They didn't put it that much into physical products, like the idea that I have with my son right now. But they just reinvested it, and they knew at some point they'll be so important and so relevant in the market that the profits will really come, and they'll just be able to reinvest but still make a huge amount of profits, which turned out to be true. But it took them 18 years or something around that number to really have meaningful profits for the first time. So that's a very much a long-term view of arguably also a company that was very strongly in the founder's hands for a long period of time. Yeah, so there you also see a little bit what the differences are. If you are bootstrapped, you can do both of that if you have enough cash flow. Usually you don't, then you get money from investors.
Yeah, so the main three skills in money is making money, spending money, and investing money. These are the top three skills. And I absolutely agree that investing is definitely the toughest one. I remember also when I was just starting out, with my entrepreneurial journey and starting thinking about business, I was like 21. And I always had people who wanted something from me. Maybe because I was able to find them, maybe because I could articulate very well an offer that they would like. And people around me were always like, where do you find these projects? And it came very natural. I was like, they are there, right? They're very easy to find. And now I understand that for some people it's easy because they nature or whatever, and for some people it's harder. But I totally agree with you that investing is absolutely hard, because it means not only having the skill of doing something right now, it also means understanding what will happen in the future. So that's, absolutely, I believe, is really hard.
So I I would maybe even say spending money is super easy. This
I
is
agree.
just the easiest. If you just think about spending money, I could just spend money today and I can spend a lot of money. If you just don't think about it, you just spend the money. What entrepreneurs do, what we do all of the time is, I mean, the salary that we pay our employees is not money that we spend. We invest money because we think that every employee that we pay has a return that is
Correct.
greater than what we actually pay. And that's actually every personal expense, every salary that we pay is actually, if it's done smartly, it's actually an investment. Every product that we buy, my son buying a dessert, was an investment because he knew he could sell it for a more. Every employee that we pay, every software that we license, every computer that we purchase, every whatever, the camera setup that you have right now, we
Yeah.
invest, we spend the money, but we spend it with a thinking, this is an investment, this is not consumption.
Yeah.
At some point, this will have
It has to
return.
have a return.
And so that's the entrepreneurial view. The most important thing that I teach my kids is to understand, am I consuming something or am I investing into something? There's nothing wrong with consumption, but consumption in the end is gone. Something, if you go to the movies,
I agree.
you pay whatever the amount is. Afterwards, the money is gone. It's not an investment into, let's say, a financial return. But it's something that you enjoy. You go there because you get a certain.
It's an investment into your well-being, mental health,
Yes.
maybe.
Yes, and that's also there's nothing wrong
Sure.
whatsoever with consumption. I think it's just very smart to think mindfully about these kinds of things. And if you want financial literacy in general, we are deviating a little bit from our initial
Okay.
topic, but we always do, and that I think that's also
we'll
fine.
get back there. It's fine.
It's really for me. It's really that people understand the difference between consumption and
Investment
really, really well, and also think about it without any feeling of shame or I shouldn't do this, but just to think about this: is this good now or is this not good now? And investing is often also has a part of delayed gratification, and consumption is often instant gratification. And we might assume that the world is not going to end tomorrow, that we are also going to live a few more years. Then investment makes a lot of sense to at least think about it and to do it smartly.
Yeah, I absolutely agree. I'm also trying to learn how to invest myself. So I've also been in this route of learning, studying, trying to improve for the last couple of years. But it's hard. It's hard to make the right decisions. And yeah, for someone who has been always used to hone and improve their ability to make money, like I have been, it's different when you have to switch between spending money or investing money in a way that you get a higher return. Of course, in a more long-term view, right? Because yes, for example, the camera setup we have for the podcast, that's definitely an investment, but you do get the results quite fast. But investing into something that might increase in value, like what you are doing with your son in a couple of years, that's certainly, it has to have some, I think, preparation, some experience as well. And I personally believe that people should invest in stuff they understand. That's what I think, because we usually love to invest in things that we think are shiny, that we think will increase in value, right? But we have to understand the thing quite well in order to make, let's say, a thoughtful investment. Let's talk maybe a little bit about the current event of Mira Murati's startup. So
Okay.
as you very well know, she was the CTO of OpenAI. She was, let's say, the technical leader behind ChatGPT. And recently, for whatever reason, she started her own startup. She quit OpenAI, and they have a crazy valuation of 10 billion for a startup that is running in stealth mode, and they have already raised 2 billion out of that evaluation. So the question for me would be, is this a bubble? And if not, where would another AI startup stand in today's world with Google and OpenAI running so fast in this whole AI space?
So this whole AI space is absolutely heated up. So I mean, this is clear for probably everyone. The question is, And several of these startups will not live up to the hype, etc. But that doesn't really matter if AI is really going to be so game changing, like a lot of people from the Silicon Valley say. I'm really torn. I don't
Okay.
know who can, right? But it's definitely overblown, overhyped. To it's
It's
way
out of
way
proportions.
yes, that's the right word. So it's not might also not be healthy to have that. Nevertheless, what I see in AI, because all these breathtaking things are coming out, the video, how good it is now, the audio, how good it is, what it
It's really amazing.
understands, the amount of content I can put into an LLM and what I can extract from it, how it can reason.
Mhm.
So it's very, very impressive. So if that continues, that rate of that acceleration that we see basically in increased capabilities, if
Yeah.
that really increases, then we are creating something that of a value that is so enormous that some of these valuations
Mhm.
seem to be fair and maybe even cheap for the winners, right?
Okay.
But there are so many unknowns, which in this game there actually are. I mean, think about it. The startup in stealth. When did she quit OpenAI? It was half a year
Eight
back or
months ago,
so.
maybe.
8 months, yeah. So within that short period of time, the company is valued at 10 billion.
Billion.
That's insane. That's just really insane that somebody invests 2 billion there. So
Yeah.
basically, they have a 20% stake then in that company. It's just crazy. It's just really really crazy. Which yeah, I don't really have a lot of words to
Hmm.
or not very strong opinions about
Hmm.
whether this specific deal is now worth it or not. I tend to not look too much at the hype. Having said that, I'm also a little bit fired up by the capabilities of AI. We need to do a podcast on AI to just
The
uh,
next
just
one.
talk about what we see. Yes, let's absolutely do that. So because it's so crazy what this does. Also, Pirate Night, the event that we are
Yeah.
doing in August, I'm also going to do around AI. I'm mostly interested in how AI and humans, how they interact, that whole thing, that how we interact with the world, how we generate value, what is happening to our skills. Because think about it, my kids, they can generate songs just with AI. They can generate images. They can manipulate images. They can have access to all skills. So
Hmm.
what we see is the democratization of skills. They can ask questions. They can be tutored on math, on history, whatever
Yeah.
they need in a school, and they're actually doing
It's
that.
crazy.
It's very different from a world where we grew up in, certainly where I grew up in, where skills were really rare. I
Yeah.
didn't grow up with the
And
internet.
very
Then
important as well.
then the internet came and we kind of could Google stuff, but it was
Yeah.
hard to collect things, and took some effort to actually find the things.
Yeah.
Now you just ask a question and you just ask, okay, give me a step-by-step instructions, and you get these instructions, and you can basically, probably not true, think about this a little bit, you can build rockets just by step-and-step instructions from LLMs, or something
Yeah.
complex that is more. So I can certainly fix my car, my dishwasher, and all those things just by taking a picture, saying this is broken, this is what I'm seeing, help me fix it. Certainly works, not having talked about all the coding stuff that we
Sure.
that we see. So back to that valuation thing.
Hmm.
If this is really continuing, the valuation will be valid and true. But only a few of these companies will really succeed.
The promise of Mira Murati startup, of which we don't even know the name because it's fully in stealth mode, is that they are building it with engineers who left OpenAI. So that
Mhm.
kind of the premise. It's very interesting that also the Albanian government has invested 10 million euros in that startup,
Wow.
which I believe makes it the first investment into a VC funded startup by Albania. I'm not sure if any other country does that. I'm not sure how they did their due diligence, besides the fact that Mira is Albanian, but that's a very interesting fact.
And how did they get in, right? Interesting.
Yeah, they got in with 10 million euros in
No,
this
but
first
usually, I
round.
mean, usually these startups are heavily oversubscribed. So
Okay,
within hours, days, they are just
okay. So you don't
so
get the
that
space.
yeah. Yeah. So, but yeah, probably Albanian connection. But that's actually wonderful to hear. Okay, great.
Okay.
Interesting
Okay.
that the Albanian government is doing that. They will only hold a very short, very small portion. Interesting play.
So to me, it's interesting because I believe Google with Gemini, OpenAI, Meta as well, now Grok, effects, it's also quite good. They are running so fast. I believe they are making 2 billion in revenue every month. Right? And this new startup has 2 billion to spend to build the whole thing. Do you really think they can compete? Like, is it even feasible? Or do they have to go towards a niche route?
So that's just speculation. If we don't know anything about
Mhm.
what they're up to, I cannot really see them building yet another LLM.
Okay.
If they would, because I
I
think
fully agree with
LLMs
you.
are also over time they're going to be just basic infrastructure. They're going to be
Mhm.
commoditized, I think, and then you build
Stuff on top of them.
special cases on the top. So where what I see in the future, just maybe AI we do another time, where I see
Yeah.
where value capture actually happens, and maybe just speculating what they're up to. On the bottom layer, the infrastructure layer, the LLM layer, I think that's going to be open source models, DeepSeek, all of that over
Mhm.
time.
Yeah.
The costs are, and also the revenue potential is really going to go down. But nevertheless, it's very interesting for those companies or those models to get a continuous stream of data in. So that is of value to be the better
Yeah.
model. And then also the interfaces are going to be much more real time, I think. And we are going to build, or we're going to access something, and we're just going to say, "Hey, give me a data view," and it's
Mhm.
instantly. It's basically that view is actually built, and it's not that much more developed, pre-developed, but more like an instant screens, if you will. But that middle layer, I don't know how to call it. It's just some middleware, AI middleware,
Mhm.
where a lot of the context for me lies. So let's say my context, my life. Imagine, and that's where we are certainly going. Imagine that I feed everything that happens in my life into an AI, but I'm not feeding it into the LLM. I'm basically feeding it into some kind of middle layer. And
Yeah.
if the context window is then at some point, it's 1 million tokens now for Gemini. It will soon be a multiple of that. As
Mhm.
Sergey Brin even said, it's very feasible to have unlimited tokens as a
Okay.
context window. So that's going to be really, really interesting, I think, to somehow dominate that layer, because context is everything that matters in AI. You can ask a question, you'll get a very different answer
Mhm.
if the context changes. It's the same with you and me, right? If I ask you something and I have a certain context, or you have a certain context, you give me a different answer than something else. So maybe they are doing something there, but they are much
Mhm.
smarter than I am. I certainly think it's interesting that OpenAI with Johnny Ive and then IO, which was now also taken out of the market again, that they are presumably building something in the gadget space. So they have a new device that they come up with, and they need to be really fast with high volume into the market to actually make it meaningful. That's also a nice kind of area where value creation is totally possible. Give me more insight into what she's up to, and I can give you more like my
Mhm.
speculative blathering here about whether this makes sense or not.
It's all
Um,
about speculation right now. We know
yeah, I
nothing.
yeah, exactly. So honestly, I have no idea. I'm also just a spectator sitting here with like an open mouth, seeing what is
Mhm.
happening in this world, and just seeing it pass by. And it's just wild. It's a so to be honest, I've seen a few disruptions, but this disruption feels like the biggest that I have seen or that I have felt in my life.
Also, due to the speed of adoption, I
Yeah, it's
believe.
crazy. I mean, how many people are using ChatGPT now? It's super high, or
Mhm.
AI on a kind of regular basis. We haven't seen that with any technology. The impact that it has, the regularity that people use it, the value that I get out of it, and I assume a lot of other
Mhm.
people also get out of it. It's
True.
insane. I mean, think back 2 years ago. I mean, we cannot even. think about how did we do it back then, right? Because now you just naturally just
We're very
upload your
dependent.
PDF with, I don't know, 50 pages. You just upload it into AI and just say, give me a summary or something like that. Before, we would be scrolling through and searching for stuff crazy if you actually think about it. But yeah, so let's get back to that valuation stuff. It's completely blown out of proportion. Some of these companies will actually succeed. That's the game that they're playing. The interesting thing is, as a young entrepreneur, what field should you go into now? And should you play that same game? Should you go bootstrapping? Should you
That was
not?
my next question.
And yes, what is your take? So what kind of business would you build today?
That's a great question. So I believe the standard answer to that question is build something in AI. I love going the opposite way. I love going the way where nobody else is going and everyone is running towards AI. Also see all these gurus and financial people who talk about AI and how they would build, let's say, a business there. I would not go there. I would go into a business that leverages people more, because that, as we've also discussed priorly, that will soon be less and that will soon be lacking. So that's what I would do if I would be an entrepreneur.
Give me
I,
some examples.
That's a
What
great
could that be?
question. Well, I haven't really thought about it, but I would, again, I would try to build businesses that would improve person to person experiences, in person
Mhm.
experiences. Now, certainly that can be events, for example, but that's not a space I'm particularly interested in. But I believe there is a way we can use technology to improve this in person experience. And social media, for example, what they have done is that they have actually brought us further away. So we're not closer anymore. We're actually more far away than what we were before. And we
Yeah.
could maybe build something that draws us closer. So again, I haven't put any thought into it because certainly I'm very heavily focused in what I'm doing right now. But that's
Yeah.
where I would look at.
So the thing that is happening right now is that as a young entrepreneur, you could think about, okay, there is no point in building anything anymore because AI is going to do everything. I think
Yeah.
that's very wrong. It's a very wrong way to actually look at it, because AI might be really good at doing certain things. That does not mean that it will impact most people actually, because we are going at various speeds in the world, and there are some are really are using it a lot. I was at a retreat this weekend. The people there, some use AI, some use it, like have used it, but they don't have it in their daily lives yet. Most of the people that I spoke to there, and that's very different from me. I use AI daily, absolutely, and also in my bubbles, people do. My mom, arguably, she's a little bit older, but she doesn't use AI probably at all. She probably doesn't even
Okay.
have an account. So actively, I mean, right? Actively choosing,
Yeah.
okay, I'm going to use AI. Obviously, in products that she uses, AI is there. Google
Hmm.
AI is
Sure.
powered by AI. So the search one. My brother, which is around my age, he doesn't really use AI. He knows of AI, but he doesn't really know how to use it. He kind of mistrusts it, etc. There is very different kind of speeds in the market, and that's an opportunity for
Sure.
entrepreneurs to have different speeds in the market, because you can see at, okay, how do I fill these kind of gaps? I can provide something dedicated for a certain group, which is maybe more like an AI wrapper,
Hmm.
but which is just dedicated, works, etc. And people will be pretty sticky. Is that a lot of value creation? I'm not sure. So the businesses that I see being
Could be
built will
short
be a
term.
lot of transitional businesses. So you build
Hmm.
something, and then it will go. Then it
Yeah.
will kind of
And you
kind of
build
wither
something
out,
else. Yeah.
and then you build something else either adjacent to it or on top of it, or something like that. And I I'm also not saying building an AI wrapper is a good idea. It's certainly not a fundable idea, because the moat, the defensibility is very, very low.
Hmm.
But I'm saying there are a lot of opportunities. And the opportunities that I'm very attracted to, obviously, because I have all this, I want to make business more human,
Hmm.
is what you just said. I really like that space where we kind of go back to the physical world and think about how all the learnings that we had in the digital world, how to bring them over. A lot of things in the digital world have worked tremendously well because digital has different rules.
Mm-hmm.
If you build a song, the cost of distribution, for example, is super, super low. In the digital world, if you bake another bread, the cost of distribution is a little bit higher.
Sure.
And still, there is a tremendous opportunity, I think, in that physical world, as the digital world cost of generally everything happening there, generating content, etc., is going towards zero. It's not going to be zero, but
Yeah.
towards zero. I think there are opportunities to bring that into the physical world and to enhance the physical world. Just also thinking about
Mm-hmm.
the retreat that I just went to, that's not something that AI is going to replace anytime soon.
Mm-hmm.
I think in a world that with much more AI, which much more content, which is AI generated, that
Mm-hmm.
that the value of something human generated, the value of human connection, of interaction, of face to face is really going to increase
Go high.
tremendously. And that's certainly a space I'm watching. Not saying I'm going to build anything there, but it's something that I'm watching that I would love to get more involved. It's also what we have done with Pirate, with the events, etc. It's kind of related there. So all of a sudden, this event business starts to become, defendable, or is defendable
Important.
towards what we see in the AI world. That's something really interesting. And then what I think about a lot is what becomes rare in a world of abundance,
Mm-hmm.
because things become more abundant now, and what becomes rare then is the most obvious one probably is land.
Mm-hmm.
I think it makes sense to own land because it's going to be limitless. AI is not going to create more. It's going to be limited. AI is
Yeah.
not going to create more land, and there will be human skills that AI is also not going to be good at replicating
Mm-hmm.
or even have. And I also think these are going to be rare.
Like
I
people
also think
skills, you
that's
mean?
that's a huge opportunity. Yeah, let's talk about that. Just caring. I mean, like
Mm-hmm.
really caring.
Mm-hmm.
That's something AI is going to pretend. AI is going
Mm-hmm.
to fake intimacy. So AI is going to
Fake
do as
empathy.
if, yes, fake empathy, all those things. But it's not, we will feel that it's not the same. And that's a huge opportunity also so we're going to see, I mean, who would have thought 10 years ago that there would be Twitch commentators, like commenting on Twitch streams or something like that, right? And that would have sounded completely silly. 50 years ago,
Mm-hmm.
a personal trainer for physical workout, somebody standing next to you saying, "Okay, now you do 10 reps and one more." That would be like totally silly. I'm going to pay this person now. That's crazy.
That's
And
really crazy.
think about something like going for a walk with somebody else, but paid, right?
Mm-hmm.
I'm going to pay you that you go for a walk with me. AI
Keeping
is not going
company.
to do it. A robot doing that is not going to be the same. So
Okay.
think about, I mean, these, it sounds silly, right? I totally understand. But in 5 years from now, it might not sound so
Mm-hmm.
silly anymore. And there are going to be things that are going to be created, that are going to emerge, that are silly now, but in a few years, they'll be fairly normal.
Mm-hmm.
And these are the opportunities coming. Every young entrepreneur, I urge you, please consider, please do not give up and say, okay, everything is taken anyway. But look into these areas where things are emerging, are emerging. And I even believe that what you don't need a lot of capital in the current time, because skills, as they come to zero,
Are
or
really cheap. Yeah.
maybe let's back up. Why did you need capital? Because you needed to pay
Hire
people
people.
high salaries, because skills were rare. What is happening now? The value of skills is going towards zero.
And we have a use
If
case, by the way. There's a
Yeah,
startup called Base 44. I'm not sure if you've heard of it.
I have not.
It was
Tell
vibe
me.
coded 6 months ago. It got sold for 80 million euros to Wix.
88 80.
80 million euros to Wix. I
Wow.
believe it was the sole founder. it got to 200,000 users or something like that, even more. And of course, they bought the users. They didn't really buy the software, because the software they can even rebuild eventually. But
Yeah.
that's what happened. Someone had the idea. I don't know the idea because I didn't really look into it. They built it through AI. They vibe coded the whole thing, and they sold it to Wix for 18 million euros.
Yeah.
Crazy.
So absolutely interesting development. We're going to see a solo founder company going to a $1 billion valuation at some point. If not this year, then likely next year or so. This is going to happen. I don't want to paint the wrong picture. It's also not something that I'm ambitious about, being a solo founder of a one billion company. So we are celebrating this because this is rare, or not celebrating. We're talking about this because this is rare, and rare means it's not something that you can easily replicate, because a lot of the vibe coded whatever startups
have all failed.
They just also fail, and this is totally okay, totally healthy. You'll have a much bigger chance if you solve one problem, you solve it well, and if you just get your revenue in.
That's
if
more
you get
guaranteed.
to 500,000 euros in revenue within whatever year, that would be amazing. That would be like a tremendous success, like a crazy success. But use the different speeds in the market that I talked about. Some you really use AI extensively, others don't. Use that to your advantage. Use the highly, really quickly dropping value of a skill. So they're going to use it. So use AI to actually build products, to do the distribution faster, better, whatever, and play on all these trends. And if change is happening in the market, that's the time for huge opportunities. It's tough to see those, but again, you can also ask AI, right? So give a quick example that what we actually did, and I really love to also do that with you, is to ask AI, tell AI you are a top entrepreneur, really a top-notch entrepreneur, a top-notch whatever business expert,
to put
manager,
it into context.
Consultant. Yes, and then ask, okay, this is my idea, this is my company, these are my numbers, this is whatever. Put all the context in there that you have, like your financials, your whatever. You have a small business. You put your financials in there, and then you say, okay, I want to do a strategy workshop with you. Then you tell the AI, all right, give me the first question to actually answer. Then with your co-founder, with your sparring partner, with your friend, with your mom, whatever, you talk through this question extensively. You record all of it. Record all of it. Grab the transcript, put the transcript as a response, have AI work with it, and get the next question out based on all that context. Do that with Gemini Pro or something that has a big context window. And then the next question comes out. Then you take another 5, 10, whatever minutes it is, and you just blather, you just talk. All right, this is a good question. We have this, we have this, but this one customer did that. I have a really big issue with this.
Yeah.
And then you come up with yet another set of questions, lines, ask for advice. You'd be surprised how good the advice actually is. And I really want to urge everyone to, if you have a situation like that, can be a business situation, can be something else, to actually talk it through, think about it. This is how we are going to interact with these tools soon. The most important thing, they need a lot of context. That's something, privacy, you're giving a lot of your data in. The better the context is, the better actually also the outcomes. And then if you are thinking about, should I go bootstrapping or should I go fundraising, they also do the pros and cons with AI. I have done this. It was tremendously helpful. I would really urge people to, at least before they say this is all bullshit, at least to try it out. It's, to me, it was really a pretty life-altering experience, or not life-altering, but really it opened up my perception of what is actually possible and where this whole thing is actually going.
Perfect. Thanks a lot for the insights. We kind of went into more the AI topic, which we will certainly discuss more next week as well.
Maybe we also just cut this into 2 pieces or so. Let's see.
Yeah. I would also love maybe to touch upon also the fears that people have with AI and the fact that many of us feel that AI is kind of getting our job and it's replacing us. So I'd love maybe to talk about that next week. So
Let's do so.
thank you, Manuel, very, very much for the insights. Again, for everyone watching, we have opened a community on Telegram where we talk about these topics. We share also insights written and also the videos that we record. We'll put the link down to this video. If you want, come join us, and certainly I believe you'll get value out of it. Thank you, Manuel, once more, and yeah, let's talk again.
Thanks. Take care.
All right, have a good one.